Good morning. We're half an hour away to the open here, Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Choong Wilkins.
Our top stories this morning. It's a cautious start to trading in Asia after volatility hits Wall Street, with investors unnerved by President Trump's tariff plans, even as he downplays risks of a recession.
Yeah, Donald Trump dialing back his threats to double duties on Canadian steel and also aluminum here by 50%, or to 50% rather, but says Australia will not be granted an exemption from those tariffs.
Also ahead, Ukraine accepts a temporary US-brokered ceasefire plan in return for military aid and intelligence.
Plus, a big show coming up here. A lot of key executives coming through to discuss earnings, industry trends, with top executives from Chinese auto tech providers Hesai, ECARX, and we're also talking PCs with Taiwanese PC maker ASUS. Welcome to the program and good morning. I mean, the story across these markets is really just a moderate reversal of the downtrend, which I have to caveat as well that, the momentum across many of these markets really looks terrible as far as, sort of sustainable upside is concerned. Although that being said, of course, they're here and now. We are getting a bounce, as you can see. S&P futures up 0.3%. We managed to skirt entering a technical correction as far as that specific benchmark is concerned. This one actually is also very close to Australia, and really on the back of, I guess, the news flow, right? You had these exemptions perhaps not being applied to Australia, for example, 1.5%. That now takes the index down 9% from the top on, interesting enough, Valentine's Day, Feb 14, or not interesting enough. 0.2% to the upside on the Asia-Pacific benchmark. We are likely to see a bounce today across these Chinese markets. In fact, just on that very note here, and as you can see, a couple of markets are coming online, like Taiwan. And we have this ASUS conversation coming, of course, later on in the show. It's a very tech-heavy, tech-focused show we have for these next 2 hours or so. So the bounce I mentioned we're likely to see, and really if you read the read-through across markets in the U.S., of course, particularly the China proxies, 3% to the upside. NIO was a big one. NIO, XPeng have been really big moves of late, BABA for obvious reasons, and of course Hesai was at 50%. So we'll talk with David Lee later on, of course, on their plans, this tie-up that they have and really what they're projecting as far as earnings are concerned. Right. The approach to the open is flat. It's worth pointing out that the southbound flows, which have been really a key source of support here for these markets, actually started extremely strong this time yesterday and then turned negative into the close. And they were net sellers of these Hong Kong markets. We're looking at steel for obvious reasons here, given, of course, the tariff conversation. And on dollar China, as far as technicals go, 200-day moving average to the downside, we're hitting that as well. So you flip it around, that could be your resistance to the upside. At about that level, 4-month highs in that. And the CGB curve, 2, 5, 10, and 30 had a 2% print yesterday. That's what we're tracking here today. So we're pulling back a little bit from that, as well as a 1.9% handle here, Rebecca, on the 10-year yield in China.
Yeah, that's right. Yields very much still in focus. Essentially on that 10-year specifically, to your point there, we saw them surging 19 basis points over the last 5 trading sessions. And that essentially is the biggest jump in 5 years. Now, there's sort of 2 big reasons for the move, but we have a really nice column out by our colleague Yes overnight explaining that part of the move has in fact been driven by the PBOC engineering this sell-off to try and cool speculation that we've seen in the fixed income market. Of course, part of that has also been the DeepSeek story, people, moving away from safer assets and trying to take advantage of the rally that we've seen, largely speaking, at least in some of these stocks, particularly in Hong Kong. However, to your point about southbound flows, yeah, we'll keep an eye on that closely today. We did see this reversal. We had a record number target hitting on Monday, about $3.8 billion US. Elsewhere, the USD, yes, the USD-yuan exchange still in focus, really over this story, and it's closely linked to the PBOC story, whether or not they're going to continue to offer really this focus and support to maintain that currency stability, or whether we may finally start to see the looser monetary policy that was promised to investors all those months ago. There's been a bit of whiplash for investors, being promised something and then not really seeing any of those cuts coming through. The commentary from the PBOC, however, Dave, has still been relatively hawkish. Elsewhere, we also have the earnings coming through Cathay Pacific, Samsonite.
Yeah, it sounds like a travel day if you look at that. Okay, to the point Rebecca was making, right? So there's uncertainty around tariffs, and perhaps it's really one of the key reasons why, the PBOC, which told the markets back in December that they were going to move on rates, haven't just yet. They're looking at the timing. They will do that, they say, when the timing is right. Now, on perhaps more of certainty, is that a good way to describe this right now? On the trade conversation, so you have the White House saying this 25% levy on steel and aluminum will go into effect midnight their time, March 12th. That's the U.S. time, of course. That's as the Trump White House, or Donald Trump himself, backed off on this threat to impose 50% tariffs on Canadian metals. Let's bring in our Chief North Asia correspondent, Stephen Ingles, joining us right now from Beijing with the latest here. Yeah, Steve, obviously multiple fronts here, Canada, Mexico, and China, Australia included. Why did you get us up to speed?
Yeah, no doubt that the Canada story is front and center now, but China is definitely watching the gyrations. And we'll talk a little bit about where the negotiations, or lack thereof, between China and the United States are going right now, when you kind of have a hard time figuring out what you're trying to mitigate, because the news flow changes almost by the hour. And that's what we saw overnight, essentially a roller coaster ride with Donald Trump essentially threatening doubling of those steel aluminum tariffs on Canada in response to the Ontario Premier, Doug Ford, essentially saying that he was going to put a tax or increase the surcharges on Ontario electricity sold to the United States. Much of that goes to the state of New York. Now, there was a lot of wrangling back and forth, and Howard Lutnick, the Commerce Secretary, agreeing to meet with Doug Ford, the Ontario Premier, now tomorrow in Washington, D.C. So a little bit of a pullback from the Ontario stance, and that made Donald Trump pull back as well. Anyway, within less than 3 hours right now, those no exemption, no exception tariffs on steel and aluminum to all trading partners go into effect in less than 3 hours from now. So again, yeah, China's watching this. Market participants are watching this. You saw a sell-off pare back some of those losses by the close in the S&P, but that index is still down 3.5% this week because of these gyrations, because of the threat of the R word. Recession, obviously, which Donald Trump sort of backed away from a little bit, saying he thinks the U.S. economy is as strong as ever. It's about to boom. As far as the market goes and the downfall so far, the losses, he says they're going to go up, they're going to go down. He, in reference to the markets, doesn't concern me. Well, it clearly has been concerning a lot of market participants.
Stephen, you hinted at this right at the beginning of your answer. Where do we stand when it comes to the discussions between U.S. and Chinese officials on tariffs? And now that the MPC has closed, what should we be looking for next?
Yeah, any indication that they're going to move up the value chain, if you will, on the negotiations. Right now, there's been growing frustration on both sides since talks. Very little talks have been stuck at the lower level working group level. And China has said, listen, we haven't heard the exact demands from the United States on how to address the fentanyl issue, which, of course, is at the core of these now 20% added tariffs on Chinese goods into the United States, because the United States doesn't feel China's doing enough. Now, what we're hearing from sources is that the United States, or the White House in particular, has said, no, look, we've given our demands either directly or through even the U.S. ambassador in Washington, D.C., in notes to Chinese diplomats, essentially saying they want three things on the fentanyl issue. Some reasonable, some some would claim to be a little bit outlandish. One, stop sending the precursor chemicals to Mexico. Well, that would indicate that China would have to admit that it is doing that. Secondly, use the death penalty for drug smugglers. We all know that China has one of the toughest drug anti-narcotics policies, and the death penalty is used for drug smuggling. But the third one is probably the one that gets the most attention and probably is the least likely, and that is, according to sources, the White House is asking China to essentially order a front page, full page, if not front page, article condemning essentially the fentanyl trade in the People's Daily, which is the Communist Party mouthpiece, the most senior Communist Party mouthpiece, which is usually dedicates the front page to the thoughts and policies of Xi Jinping. For China to do that would indicate that they are part of the problem. And everything that I've heard while I've been here the last 10 days, every official is essentially, including Wang Yi, the foreign minister, saying this is not a Chinese problem. This is a U.S. demand issue. And essentially, he had the sharpest words last Friday in his press conference saying the Trump administration on fentanyl has been two-faced, and that was maybe one of the more kind assessments that Wang Yi used.
Stephen Ingles, our Chief North Asia correspondent in Beijing for us. In fact, later on in the show, we'll be taking a closer look really at Chinese media, really just to underscore the point with the narrative and how that's being framed onshore. Now, as we go into the open today, so we're about 20 minutes away, right? So yesterday was a really good reminder that while mainland investors and this wall of money coming through the Stock Connect is indeed, of course, a pillar of this rally, it won't be enough on some days. We turned negative on the southbound flows. Yesterday, obviously, markets pulled back. We're likely to see a bounce today. And on top of that, where this market goes from here will really depend, Rebecca, and I think our colleague put out a really great column, a piece today on this, will really be the incremental money that will come in, hopefully, to this market.
Absolutely. And there's a really interesting comment here, note by Kinja Lau, who's at Goldman Sachs, of course, who we've spoken to in part about this, that the longevity of this bull run is also a function of to what extent global mutual fund mandates. And we have been having this debate, I think, with almost all of our market guests coming on, to what does it take to sustain this momentum? And I'm thinking back to that conversation we had with Winnie Wu of Bank of America, saying this could be that sort of 2016 Baba IPO moment, but the makeup of investors this time around is going to be very different. She anticipates that we aren't going to see US investors coming in and rushing back into China's capital markets. Instead, we're going to see global flows coming from elsewhere, including from Europe. But that this is the beginning of this sort of structural shift where investors are coming back. Long-term investors, foreign investors, will slowly start to come back into this market.
Yeah, and I think Citi made a good point yesterday where they're neutral in global equities, but within that, of course, they've upgraded China, downgraded the U.S., HSBC, who joined us yesterday as well. And while we talk about that, have a look at these flows, right? Harold van der Linden talked about how, from a global perspective, if you're a global equity fund, for example, flows are coming back into EM. For EM mandates, the question is really to what extent China prices out India and other of these markets. What's interesting, that we had a look at ETF flows. I'll end on this very, very quickly. This does underscore a few points. It's been very concentrated, the rally, in Chinese internet. Excuse me, number one. We've seen outflows year to date for large caps and overall, so that tells you really what the concentration is. The S&P passive money is still there, despite the recent weakness. So, yeah, this is an evolving story. We'll get to all of this, of course, later on in the show.
Yes, and to your point earlier, it is going to be a tech-heavy, it's going to be an auto-heavy show today. But elsewhere, coming up, we'll also be talking investment strategy next with LGT Private Banking Asia as US exceptionalism takes a hit. And later on in the China show, the CEOs of Hesai Technology, ECARX and ASUS will be giving us their business outlooks. And we're counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. Good morning. You are watching The China Show.
Welcome back. You're watching The China Show. A lot of eyeballs have been focused in really on this U.S. market story. For a brief, I would say, couple of minutes overnight in the Tuesday session, it looked like the the S&P would drop into a technical correction. Towards the end, we did see a bounce of the low. Still ended lower, though. So, I mean, it still could happen this week, really, just looking at how horrible the momentum looks on this U.S. market near term. We are seeing a bounce, though, as we speak right now on S&P futures and other contracts there as well. Let's bring in Stefan Hofer, MD and Chief Investment Strategist at LGT Private Banking Asia. Good morning.
Good morning.
What do you think is going on in the U.S.?
So I think, first of all, I mean, it's quite telling that President Trump actually has to already start to use, the recession word and downplay that. But I think if you look really, really carefully on the hard economic data, discretionary spending, the labor market, corporate profits, and so on, I think we can still say that the U.S. is running at a very high level, and the hard economic data does not point to a recession. But we do have a problem in terms of sentiment. University of Michigan, Conference Board, all these kinds of very important indicators are clearly pointing to weaker sentiment. And at some point, sentiment spills over to the hard economy. So we really do need to see a circuit break to stop that from happening.
What does that circuit break look like?
Well, I mean, it's quite a grand wish list. I mean, a curtailing of the tariffs, walking back some, more on that front. Also, what could be very helpful would be progress on Ukraine, Russia, and of course the U.S. So a lot of geopolitical stuff, basically, at this point.
Could the Fed be that circuit breaker, you feel?
Well, the Fed has a very huge challenge now because a lot of these policies that we're seeing, if they come through, will still point to inflation being relatively sticky for a longer period of time. Yeah. And so, therefore, they're going to be curtailed in terms of how fast they can cut rates. President Trump has been very clear. He wants lower rates. The Fed may not be able to deliver that.
You mentioned tariffs. Is that the biggest issue on the horizon? And how do we think about tariffs against some of the other sort of resolution of geopolitical risk?
Absolutely.
Ukraine, US, minerals deal, ceasefire, etc.
I think what a lot of us did in financial markets, especially last year when it was very clear that the tariffs were going to be on the agenda, we all said it's a negotiating tactic. The bark will be worse than the bite. Now there's clearly some bite coming through, and it's very, very difficult to really estimate the rippling effect across global supply chains, how bad the pain will be for everybody else. Now, the thinking in Washington seems to be this is bad for us, the U.S., but it's worse for you, the rest of the world.
I want to ask about that bite, specifically in China. We've seen 20%, sort of cumulatively, that takes us between 30 and 40%. Were you surprised by the response from the MPC to that? It does seem like Beijing's perspective is that they can stomach that so far.
That's right. I think China has been well prepared for this and has acted, proportionately. That's less of an issue. It's more things like Canada, steel, aluminum, ditching of the trade deal that President Trump himself was instrumental in bringing, I think it was in 2020. So it's more issues like that.
What do you feel strongly about in terms of just conviction costs right now amidst all of these things?
Well, I think, if you agree that Ukraine-Russia settlement is weeks or months away, then you're going to see a very, very strong peace dividend impact European asset values even more so than they have done already. So that will be helpful. You'll see further euro strength. And on top of that, we have to remember that Europe is in a very different position. The ECB is cutting rates, monetary aggregates are rising, credit growth is rising. That's a fantastic backdrop for equity values.
Right. Now, just a question. If we do get a ceasefire or something along those lines with Ukraine, do you think the market takes that as an excuse to take profits from this massive move up in defense stocks?
Absolutely. Some of them do look quite parabolic in terms of how they've gone up.
That's not vertical.
Exactly. I think the million-dollar question, and it has not really been addressed anywhere yet, is how do you put in a deal that secures Ukraine's security in the future? That's not been addressed. You can talk about ceasefires, you can talk about prisoner exchanges, all those kinds of things, but how do you put something permanent in place? If you get a permanent resolution to this horrible conflict, I think European values will go higher.
So along with these question marks that we've had over the US exceptionalism story, there is this line of argument that European growth is going to be the driver for global growth. To what extent do you buy that? And if you see that dynamic, when do you think that comes into play? Because as you say, it's going to need US sentiment to turn from sentiment into hard economic data.
Right. Well, Europe, taken by history, does move slower. reforms happen at a slower pace. But every so often in history, there's a big moment. You may remember the Hartz IV labor reforms in Germany a long time ago. That was a big deal, and that really moved things forward a lot. Now, of course, Europe has to take its defense and security matters in its own hands. Hundreds of billions of euros being spent on that. Maybe we'll actually have a coalescing of Europe that we've been missing for a long time that will spur other reforms as well.
So if that's structural,
yeah.
What does it mean? Because, I mean, to your point, Europe every now and then has a bright spot.
That's right.
But for the most part, you look back, there's always a weak spot across the Eurozone economy. And I'm wondering whether this fiscal push is structural enough that, you know, the market removes that premium, that it's almost calcified around that equity market.
Right. Well, I mean, in Germany's case, the removal of the debt brake and basically saying, you know what, it was great that we had a low debt-to-GDP number in the past, but we really have to do other things now. That's very monumental. That's substantial. That's real. And that will be a driving force. So I'm more on the side of saying, let's give them a little bit more time, but changes could be happening in Europe quite quickly.
Right. It's very quickly. You like Europe, you like Japan.
Yes.
I don't see China on your list of conviction calls.
China is tactical for us. So January, the DeepSeek moment, that's very important. It is a game changer. But don't forget, the real estate market in China is still struggling overall. Until we see a change there, we'll move structural.
Fantastic to see it.
Thank you.
Stefan Hofer there, MD and Chief Investment Strategist at LJT Private Banking Asia. Right, going into the open today, just under, what are we doing, 7 minutes away here. Hang Seng Index, A50 futures, the 10-year yield is now, oh, there we go. We're closing in again on 1.9% handle. But there we go. We're looking at a bounce here today. This is Bloomberg. Okay, hump day session is just ahead. Hopefully for the bulls, that hump was yesterday, and we are past that sort of pain point across these markets. As pertains to China, though, we are likely going to see, as you can see, a bounce here going into the open today. To what extent, though, will we see that? Because, you know, the massive net buying turned to net selling into the end there, yes, across the stock connect. Yeah,
that's right. And we sort of started off our day wondering and asking the question, and in fact seeing that southbound investors were going to buy the dip. So sort of,
they were?
Yeah, slightly caught us by unawares. I think going into that afternoon session, that was a sort of expectation.
Yeah, there we go. A couple of analyst actions before we talk about some of the big moves individually here. So HSBC's out. In fact, Morgan Stanley and Goldman Sachs separately have also put out some changes on their end, but we only have space for three. So here are the three. MS, Win Macau, price target on your screens, cut to equal weight. Shini Solar and Wuxi Aptech separately at HSBC rated new buy at those specific price targets. Those are 12-month price targets for those stocks.
Yeah, elsewhere, I mean, tech still very much in focus for us today and, in fact, for the market as well. Taking a look at Alibaba, we did have this report from the Securities Times that the cloud platform Q1 is going to be cooperating with this new news, rather, of a Chinese AI startup, Manus, on some of its open source models. And, of course, we do have this summit coming up on Thursday. This is Alibaba and Huawei.
Yeah, looking forward to that. Mark your calendars. Now, it's a conference hosted by Hangzhou government. There we go.
Yep.
Coming through on Thursday. EVs in focus here. So these really led the gains overnight, right? Up double digits for NIO and also XPeng. So more on this in a moment. The open is just ahead. This is the China Show. Good morning.
Good morning and welcome back. You're watching The China Show. We're counting down to the open of markets and really wondering, question mark, whether or not we start to see a little bit of a bounce back. We had three sessions of losses in Hong Kong, stocks in Hong Kong, Chinese stocks in Hong Kong, that is, and a little bit of a recovery perhaps in the works today, Dave.
Yeah, we're looking at that question. What I've been wondering, and this is completely random right now, and you don't want to get in my head, but I mean, just to share that because we're here, I wonder if stalking is stalking when it's done on LinkedIn. Anyway, it's not important, but every now and then you get a list of people who check your profile out, and I'm wondering why we have a different standard for LinkedIn than we do for other social media. But again, I guess we're opening up a different can of worms there. The open, speaking of, in mainland markets, 0.2% on the Shanghai comp to the upside. The big news this week across these markets, when you look at mainland, though, is really, well, number one, on the currency, and we'll see how CNY adjusts to this move up in CNH. CNH is at a 4-month high. The other thing I want to point out is that, this move up across the bond curve, we're now flatter, in fact, because the short end lead that melt up, the long end is just catching up as well. And we have a massive bond auction on Friday. In fact, the most ever. The finance ministry said that it is planning to sell, get this, this is $23 billion equivalent of 2-year government bonds on Friday. That's the largest offering ever of that tenor in a single auction based on the data that we compute. Just mark your calendars now and see what demand likely looks like as far as that is concerned. The Hong Kong Open is looking like this. And we are expecting and we are getting A bounce at the open, led by tech, again, 1.4% on the HS Tech Index. MSCI China's up 1%. The question right now is what will the next catalyst be, and who will the buyers of that catalyst then be that next leads this rally to the upside? We have a piece on that which we'll sort of unpack for you in just a couple of moments here. 8 shares are up 0.7%. BABA is up about 2.4%. We were up by much more than that earlier on. We're looking at southbound flows, which turned negative, which was a rarity, but it happens about once every 1.5, 2 weeks. From the DeepSeek moment about 8 weeks back. We'll see what that looks like today. Right, earnings. Cathay Pacific, Samsonite, and Wharf are coming out with earnings today, and the next page is about to show you some changes to analyst ratings. We talked about this earlier on. The reaction or lack of it is coming up on your screens. As you can see, so Advanced Microfab raised to buy at Goldman Sachs. Price target there at 275. Wuxi AppTech, HSBC, price target 8250. Win Macau, price target at Morgan Stanley, 5.5 Hong Kong dollars. And Shini Solar, HSBC, price target 4.4. We got through a lot there, didn't we?
It was a relative tour de force there, those actions. But now time for a look at some of the headlines that we are watching in Chinese official media. We chatted a little bit about this earlier, but the reaction essentially to what's going on in the US economy, what's going on in the Chinese economy. And as we saw the 2 sessions wrapping up in Beijing, state news outlets are out with commentary touting the economic strength and resilience. Xinhua, for example, listing the reasons that the, quote, economy deserves your confidence, including China's institutional advantages, effective governance, vast space for further growth, innovation and reform. And of course, this story about confidence is absolutely critical when it comes to the consumption focus that the MPC has laid out.
Yeah, I mean, of all the major economies out there, I think you can come up with the longest list in China of economic levers. But really, what is the most attuned to confidence? It's just very hard to measure. Yeah. But once it turns, it starts to turn, and everything else starts to look great, right? In the meantime, though, to Rebecca's point, state media also spotlighting the bullish calls in Chinese stocks. We talked about this yesterday, that move out of Citi, upgrading Chinese equities on its front page story here on the Securities Times, which also, by the way, cites optimistic views from other foreign institutional investors. And the paper draws a contrast with the U.S. stock market, quoting mainland analysts who say that recent declines there are becoming a trend and are no longer just transient.
And after this stellar climb in Chinese equities that have really caught the attention of state media there, strategists also believe that a longer-lasting stock rally depends on a meaningful return of global funds. We're joined by Bloomberg's Asia stocks reporter, John Cheng, now. I mean, John, tell us firstly, why haven't we seen long-only funds joining this rally?
So if we look at the buyers of this 20% or so rally in Chinese stocks this year, of course, one major support would be southbound traders from mainland. Actually, just earlier this week, southbound trading turnover in Hong Kong was at a record. And of course, there's also a strong influx of foreign flows from passive money, and also a jiggling of Asian and emerging markets portfolio, from rotating from former outperformers like India, like Japan, But a huge missing piece in the puzzle would be the return of global long-only funds. And in fact, in the first 2 months of this year, even as we saw a huge rally in Chinese stocks, they were actually net sellers of Chinese shares. And I think eventually that is because of their fundamental pessimistic outlook of the Chinese economy. And after, so much trouble has been going on in the past few years, I think these long-only investors, meaning they will be adopting a more cautious view on the Chinese economy, and they really need to see more evidence of that side of things turning around before they can have a bit more conviction in the market. And that is the key thing to bolstering a more long-lasting rally in Chinese stocks.
Yeah, I mean, John, to your point, we've seen rallies of this sort, maybe not to this extent, but we've seen rallies of about 20–25%. And the question we've always been pondering with, as is this time any different? And I guess let me add to that question though to you. And what would make this time different in the view of those investors who have yet to be convinced?
So, like I said, I think one key thing is the solid evidence of a turnaround in the economy. Of course, the messaging from the MPC this week and last week we saw were very positive. There's a huge focus on boosting domestic consumption. And if we look at some of the property market data, they're actually showing incremental improvement. So all of that need to come together, and we need to see a more consistent slew of improving economic data in order for those long-only funds to be a bit more positive on the market. But of course, I would say the argument and the investment case for Chinese stocks is becoming more compelling now than ever because, of course, we have the technological advancement in DeepSeek and other AI models, and that's driving a fundamental repricing of China's investability, at least on the tech front. And of course, we see the retreat of the U.S. exceptionalism trade, and that means global capital will have to find a more attractive investment opportunities elsewhere. And where would they go? Of course, China would be a very sensible option because the aggregate exposure to Chinese stocks is still at historical lows. And for example, like markets like US, like Japan, they're already very crowded. So that means global capital will have a lot of potential room to add back to China. And therefore, we'll just have to give it a few more months and see if that will materialize.
These two sort of consecutive factors, the idea of needing to see the hard data, but also, of course, this enthusiasm around DeepSeek. Thank you so much for joining us. That was Bloomberg's Asia stocks reporter, John Choong there. And coming up, the co-founder and CEO of Hesai Technology will be with us to talk about their latest earnings and the impact of US tariffs on the self-driving industry. That interview is coming up next, so stay with us. This is Bloomberg. Good morning and welcome back to the China Show. Now, a name in focus, US-listed shares of China's LiDAR maker Hesai Group jumped as much as 50% overnight after Reuters reported its partnership with Mercedes-Benz. David Li is the co-founder and CEO of Hesai Technology. He joins us now from Boston. David, I have to start with the obvious question. In your earnings, you touted this potential partnership with a top European OEM. Is that OEM Mercedes?
I won't be able to give further comment. We did mention that we secured a new deal with a top European OEM with a multi-year ICE and EV platform. And it's one of the biggest one we received, and we are super excited about it. But unfortunately, I won't be able to give you further details on the OEM's names. Not even the first letter of the name, David? I'm kidding. Okay, well, I know you can't.
One of the okay. We'll take our chances with that. Okay. Well, in due time, let's put it that way. Could you at least help us quantify what this means in terms of growth for your business? How much potential future revenue do you think you might be able to realize from this? And congratulations, by the way, on this deal.
Thank you. Without the specific numbers, I think we should step out and think about the bigger picture. I think the bigger picture here is we are truly seeing the democratization of such a product for safety for all the automobiles. It's definitely not only self-driving cars. We're talking about the invisible airbag to be having the chance to be on every vehicle. And we're talking about globally, that's like 100 million, close to 100 million vehicles a year. And then we did that by really innovating on the integrated circuit and the manufacturing integrated components. And we brought down the cost from really high to $200. That range, and that's like 99.5% down. And that's why we're able to further advance and bring that to more vehicles. And of course, when we do that, we not only do that in China, we also do that with global partners. And we started with China because China was earlier in adoption of LiDARs and the EV, and we work with 9 out of the top 10 China OEMs by the market cap. And then globally, now we work with 6 out of the top 10 global OEMs or their JVs in China. So for us, that is taking to the next level, that we spent years of developing the core components and such a product. Now we're seeing that we've been revenue number 1 globally for the past 4 years, and we more than double our units every year for the past 4 years. Now we're looking to do 1.2 to 1.5 million units this year without sacrificing the margin. We stabilize our margin roughly at 40%.
Okay, so if you've stabilized margin, you've brought your costs down. How are you thinking, and how is that affecting your production targets, not just for this year, but the following years? Because, of course, it's also been about this question of forward planning for you folks. And that's reflected, for example, in the CapEx spend that you had 2 years ago. It's now paying off this year. So I just want to get a sense of what does this mean for 2026, 2027?
Yeah, spot on this comment. The fact that the nature of such a business is that everything is in used to be 7-year cycle. Now in China, it's like 18 months to 2-year cycle, which means that everything we're shipping this year in large volume was largely designed by the R&D effort about 2 years ago. Same with CapEx and everything. So that's why we were investing heavily and we're taking a loss for the first almost 10 years. Now start to pay off, and then you suddenly see that our profitability is significantly improved because the top line keeps growing, right? Our volume of shipments more than doubles every year, while the R&D expense also stabilized because we don't need to keep inventing new products. We already have the great product we developed from 2 years ago.
Right. Now, just to follow up on Rebecca's question, and I think to the first point we were talking about your new customer and partner in Europe. Are you looking to increase production capacity? I'll ask you directly. In Europe, for example, to cater to those, say, customers who might be concerned about tariffs or geopolitics, and if you are looking to increase capacity outside China, production capacity, how much and by when do you look to increase that by?
It's unlikely that we'll do it in Europe, but we are open to expand our production outside China. We don't have concrete information to share now, but it is one of the options we definitely are heavily looking into. I also want to take a moment to comment on the tariff because people care about the product we ship outside China today. And I'll give you a few numbers. The first is that today, actually, the product we ship to the US is less than 10% of our revenue. And the other interesting number is that because we always had tariffs, that used to be 25, now it's going up, right? But if I want you to think about the nature of such a behavior, tariff by its nature is to balance trade by adding to the price. Of course, it will make our price more expensive. But then people worry about it, assuming that we're competing on price. People assume that American people buy our LiDAR because we're cheaper. That's actually not the case. If you look at the historical data on the robotaxi, our product's actually more expensive ones. So now the question is, if we're more expensive, why do people buy Chinese product at all, right? Well, the reason is the safety parts, right? You need the best quality and best performance. And we have that. So if you think about that argument, when US slaps tariff on us, who is end up paying for it? Do people really buy the American alternative because we're more expensive, or people still have to stick to the best quality product as we are shipping today? I tend to argue that for safety part like this, tariff in the end is transferred to America without having the intended consequence that it was intending for.
Okay, so if those tariff risks when it comes to pricing are manageable for your business, what are some of the other real-world problems or real-world challenges that you're facing when it comes to these increasing geopolitical tensions, when it comes to tariffs? I'm thinking about issues, for example, with your supply chain, with potentially with production, with parts, and the visibility over that supply chain too.
We have full transparency as a hardware company, right? We are always very open to the OEMs when we offer our products to them because that's part of the process. They really need to be careful knowing each of the components, and we have always been very cooperative on that. On top of that, I think it's not about the components, it's about how people use this product. One of the, I would say, the elephant in the room is that a lot of people have misconception that, oh, LiDAR scans 3D world, does that mean it has in possession of data, right? The answer is actually no. Sometimes I tell people we build this dumb hardware, meaning that even though it's used for intelligent driving, we really don't have the capability to transfer data wirelessly or Bluetooth or anything, or even store data for more than a second. So it's really a device that has no capability of touching data or invading in privacy for that regard.
David, this is a good point to ask because you were added to the Department of Defense list of Chinese firms with alleged link to the military. Correct me if I'm wrong here. You then sued and the DoD briefly removed you and then re-added you back to that list. Just give us the latest status and whether or not this, this designation has actually affected your business at all.
It's first, you're right. The facts are right. And we were added and removed and then added. It is ongoing litigation, so I won't be able to share more details on the litigation front. But I do want to make 2 points, right? One is that it's a strictly civilian product. It's designed for civilian use. And LiDAR, by its nature, it's a 3D scan device. But the product LiDAR we build is far from the specs that military needs. So there's no way that military can use that in the battlefield or anything. So we really just build a civilian product like computers, like cell phones, like things like that. And we're certified by the Department of Commerce in the US, the EAR 99, to be civilian. Having said that, it does have an impact. To me, it's really the reputation because it accused us of being involved in the military, the military civil fusion. And the truth is that we were never part of any military effort or engagement or technology or product. And then that we've been telling our customers and the investors, everybody, that it is the case that we're transparent, we're honest. But then when we're on the list, it damages our reputation, and that is actually for us is a huge hit on the reputation, the integrity. That's why we have to clarify that, not because we think we would just sell our LiDARs to Pentagon, which is on the surface that what it was about. It was not about that. It was about that we build an honest, transparent company, and we want people to know that we stand by our principles.
Let's focus in on the technology itself, and you are, to your point, the world leader here. Where do you see? I mean, I have a couple of questions here, so I'm wondering if you could hit on them. So you mentioned democratization of the technology. Does that mean the product gets cheaper, cost per unit, say, moving longer term? That's number one. Number two is, as more OEMs adopt this, and I think you used a very important phrase earlier on, right? This is an invisible airbag, right? Will we need airbags in the future inside vehicles if everyone else uses this? That's, I guess, another question there.
Sure, great question. Well, first is that it is about a cost if you want to put that on every vehicle, right? It used to cost, tens of thousands of dollars, and no one can really put it on their passenger vehicle. Today, now we're building things at a $200 level. It makes it possible. And think about it, it's a pretty good investment if you buy a car and you know that it can stop the car if there's a potential crash, and then so $200, your kids and wife might be in the car. So both people think it's a great investment. I definitely agree with it. And your second question, sorry, what was the second question?
Well, the second question is if it works
well
enough.
So, that's right.
Yes, yeah. Do you need the airbag inside?
So now I put on my scientist hat. So anything still could happen. We're just talking about a reduced probability, which means that camera will fail, LiDARs could step in. LiDAR still has a chance to fail. So it would never be zero, but we're looking at a significant reduction on the crash rate for fatal crashes. That's the number we have, especially we've already shipped close to 1 billion units now. A lot of them are on the road, saving lives, and we look at the results and we know it's effective. So that is fast, but it's never zero.
David Lee, fantastic. We could be here all day. Rebecca and I always joke that when it comes to a technology conversation, we tend to geek out. Thank you so much for the time. Let's talk again. David Lee, co-founder and CEO of Hesai Technology. You know, we could use a tech show. Anyway, speaking of, the co-CEO of ASUS is coming on. Biggest decliner across the region today. This is an earnings story, so we'll try and help you guys understand really what the company looks like and the outlook there. So do join us, of course, next hour for that one.
Yes, and also coming up in the next hour, of course, we also have an exclusive conversation with ECARX chairman and CEO Ziyu Shen, as well as that conversation with ASUS as well. We'll be talking with ASUS about their business outlook amid all of the tariff talks and hype around AI. Good morning. This is the China Show. You're watching Bloomberg.
Right, welcome back. Just an update here of these markets. Coming up on your screens, casino stocks. We're looking at that very, very closely today. You have, of course, this downgrade, this cut. This is on Morgan Stanley. This is specifically on Win Macau. And this really comes down to the market share outlook. So we're down 2.7 in that, and as you can see, that's permeating slightly across the entire, to varying degrees there, at the very least, on this group. Right, we're looking at Chinese benchmarks about 25 minutes into the session, and you know what, we're looking mixed, unimpressive, uninspired. 23.8 right now on the Hang Seng Index. We're down a little bit right now on the CSI, although things are looking a lot more encouraging today than they did, of course, yesterday.
Yeah, a little friendlier than how we opened the day yesterday. We've had three sessions of losses, of course, now for stocks in Hong Kong.
There we go. Yeah, so there's potential for this story to turn sour, I think is what Rebecca is indirectly
I don't want to be a pessimistic penny, but, you know, anything's possible at this point in the
morning
day.
is young. Plenty more ahead on The China Show. Right, good morning. If you're just joining us right now, we just are going into the first 30 minutes of trade, second hour of the program. We are getting a bounce today, although not a very convincing one, I think, if you look at volume so far. But, I mean, that being said, we are coming off quite a bad day, of course, and against the backdrop, really, of a U.S. equity market that doesn't seem to be, I mean, yeah, you got a bounce, but momentum there doesn't seem to be convincing as well. Hang Seng China is up 0.4%. We're up 0.2, as you can see on your screens there on the HSI. A very brief look, and as we flip the page, let me just leave you with a thought on market breadth. We're doing very good on breadth. Most, actually, no, I'll take that back. Most are actually down, very slight majority. To the downside, you have Wharf Real Estate. That is a company reporting today. Right, some bright spots on your screens. You have, of course, all the news out of Alibaba. And, of course, you have this conference that is this AI summit that is being reported set to take place in Hangzhou. And Alibaba and Huawei are set to be attendees to that one.
Yes, yeah. And the collaboration between Manus and Alibaba,
QN, yes, yeah. Absolutely. Okay, so the other story on the macro front as well that we're tracking here is, so we've talked about this melt-up in yields in China. We're not really seeing that today, but we are seeing that in Japan. And again, this is a reminder that the BOJ is coming through next week. We've been looking at various superlatives really on almost a regular cadence here. And I think today is a 30-year yield effectively hitting the highest. There we go. Going back, let's call it 20 years, right? 2.6% on the Japanese 30-year yield, which, by the way, in case you missed it, is now about 60 basis points above where you are in the Chinese 30-year equivalent there. Right, very, very quickly, the mood music across Asia-Pacific is a good one. S&P futures are bouncing 0.3%. Most of this market is up, with the exception of a few weak spots like Australia, and really it might be down to the tariff conversation. That market actually is also very near a technical correction, as with the S&P 500. Let's get a sense right now of market direction these next 24 hours or so. Mark Cranfield joins us from Singapore, our MLive, out of our MLive team, our MLive strategies. Mark, well, how long can this U.S., let's start with the U.S., and then we'll talk about China in a moment. How long do you think this U.S. bounce can last?
Probably before the end of your program, it'll be all over. I mean, seriously, it looks a bit of a dead cat type variety. Donald Trump seems to be digging in for a long haul on tariff wars, and investors are very wary about it. They're very spooked by the idea that there's no end in sight. I mean, that's really the danger here for investors in the United US markets, is they can see the correlation between the longer the trade wars go on, consumer confidence crashes further. That's impacting on people's spending habits in the United States. That also means they're sticking away from the equity market. So you've got this vicious circle, and there's no obvious end in sight to it. And that is really going to dent confidence in people wanting to invest in the US market. So any bounces from here, most likely, the serious investors will be looking as an opportunity to sell stocks into any mini rally that you see in the US, particularly when you have a much more encouraging story taking place somewhere else in the world, which is either Europe or China. We get to that in a minute. What is happening in the US, it's almost as though they're goading the Fed into doing an early interest rate cut. And for now, the Fed is holding back, and they're saying we're happy where we are, we want more time. And yet the market continues to price for more and more Fed interest rate cuts. That kind of standoff eventually will break when the unemployment rate increases and the Fed will have no choice. But it's a very messy scenario. There is no long-term investor who will look at that and say, yes, I want to throw loads of money to the United States. The picture is just too cloudy and uncertain. Better to stay on the sidelines, or even better, shift your money to some part of the world that looks much more exciting, China or Europe.
Okay, Mark, I want to pick up on that point. Yeah, I mean, do you think we're going to start seeing investors throwing loads of money that they used to be throwing at the US now at China? And are we going to see this sustained momentum? I guess that's the fundamental question.
You can see some of the momentum already. You can see where it's going. Look at the euro exchange rate. That move in the euro against the US dollar, part of that will be money coming out of the United States going into Europe. It's also a story about Europe boosting its defenses, and that kind of a defense story there. But then also look at China. The currency is pretty stable at the moment. And you can see through the flows that are coming into Hong Kong that clearly money is moving into this part of the world. And a lot of that is fresh money. I mean, the flows that you've seen coming out of mainland China into Hong Kong have been very solid. Happened to be an outflow yesterday, which is pretty encouraging. If you think the decoupling story between China and the US has legs, actually yesterday was a pretty good day for you, because Chinese tech stocks managed to end higher yesterday, even though there were net outflows after several days of inflows. And Bloomberg is running a story that says that the tariff talks between the United States and China are stalled at low levels. So that means it's not even been pushed up to the senior people that make decisions. That's actually a good thing if you're a Chinese investor, because it means the pressure on Chinese authorities to continue stimulus, to continue supporting the markets is very high. They can't back away. That means that it looks as though the US-China situation in terms of trade tariffs will go on for a long time. Chinese authorities have got to keep on doing what they are. And you talk about this AI conference, which is going to happen in China this week as well. That's all very positive. You believe there are legs to the China AI story. Everything is moving in your direction. And anecdotally, I've spoken to senior fund managers around Asia. Money is definitely going into specific AI-related stocks, and it's pretty sizable amounts. And there's probably more to come as well, because this is the early stages of it. So yes, it looks as though decoupling between China and US really is a theme that's going to run for a while.
Yeah, I think, Mark, you make a good point, or a few good points there on the resiliency of these Chinese markets, right? Simply on the dry powder argument, that's bullish already. Add to that the news flow hasn't all been that positive yet on the economy and geopolitics, right? So that's a resilient story in China. I want to ask you, though, about the resilience of the rally in Europe specifically. And we put this question to our guest this time in the last hour, that if we do get a ceasefire, say, in Ukraine, might the markets take that news and take profits of this massive rally that's taking place in European defense stocks?
you may get a knee-jerk reaction, but the underlying story is much, much deeper. If Europe is really going to upgrade its defence systems across the board, we're not talking just about Germany, we're talking about France, Italy, the UK. Although UK might not be part of the EU, it still factors into the whole equation. The whole of Europe needs a major upgrade, huge spending, going from a very low base to a slightly higher base, but still very, very big numbers and over an extended period of time. That's not all going to play out just in a matter of 1 or 2 weeks. That's a story for a few years. That will all underpin Europe. Plus the fact that investors will get used to the idea that Europe is waking up. It has to do more for itself. Look at its own AI story in Europe is also very weak. They need to find their own champions. They need to make investments to produce European-driven AI narratives. They can't rely on the US anymore. They're already starting to push back against Elon Musk's Starlink plan, which he was going to introduce Starlink to Europe. They're already moving back on that because they don't really think it's a great idea to have somebody control it from outside the region, which makes a lot of sense. They need their own AI products, and that's a big investment as well. So the European story is really only at the beginning, a bit like the Chinese tech story as well. These two could run for a long time.
Yeah. Okay. Well, Mark, thank you so much for that. Mark Cranfield, there, our MLI strategist in Singapore. Sorry, I just stumbled there because I just saw the year at 109. Okay, I missed that. I think we're at 108. Let's pick up on that, that story that we just ended with Mark on there and on Ukraine. And Ukraine has accepted a U.S. proposal for a 30-day truce with Russia as part of a deal here to lift the freeze on military aid and intelligence. Now, Washington will now take the deal to Moscow.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
Let's bring in John Herskovits, our East Asia government editor, to talk us through the implications of this. Yeah, and John, so we heard from the president there, U.S. president, that they've now agreed and he now takes that to the Russians to have a look at that. Where does this proposal, the ceasefire proposal, leave Vladimir Putin?
Yeah, it seems like the U.S. and others are saying that the ball is in Putin's court now. So we're supposed to have talks today with U.S. officials and Russian officials. There's also the possibility that Trump will speak with Putin later this week. But it's up to Putin to decide where to go from here. Bloomberg reported earlier this week, speaking with Western intelligence officials, that Putin was probably going to seek some maximalist demands, which are not going to be amenable to Ukraine or Europe. I mean, some of the things that he's looking for are no European peacekeepers on the ground if there is a peace deal coming forward. He wants to see the territory that Russia has seized remain in Russian control. He wants Ukraine to abandon any aspirations of joining NATO. And he's also called for fresh presidential elections. So we'll see where Putin is going to go, but the expectations are that he's going to demand quite a bit, and this is not going to be acceptable to major parties, Ukraine and European allies.
John, can you also break down some of the nuts and bolts of what's actually in this proposal?
Sure. I mean, some of the things are prisoner exchanges. Ukraine is trying to get return of some of the children who have been taken into Russia. It's seeking an end to aerial assaults, missiles, drones, that sort of thing. As a part of the aside, the U.S. is hoping that this will further on its minerals deal with Ukraine. And also the main thing for this is that Ukraine sees an end of the freeze on aid and intelligence sharing that it had with the U.S. So these are some of the things that are in the deal, specifically and indirectly, which are part of this agreement for the 30-day ceasefire.
Okay, thank you so much. That's Bloomberg's East Asia government editor, John Herskovits, joining us. And up next, we have ECARX chairman and CEO joining us to talk earnings and the outlook for driver assist technology. Plus, we'll also hear from the co-CEO of ASUS on AI and how they're positioning to deal with Trump's tariffs. Those exclusive conversations are both coming up ahead on the China Show this morning.
Right, welcome back. We're continuing our theme here on earnings, tech, autos, everything in between, an intersection between those key themes here. You have Geely-backed auto tech firm, ECARX, has trimmed its full-year net loss by 3%, while, as you can see, revenue's up close to 20%, total shipments up a third to 2 million, plus including, let me just also mention, a parts to the earnings statement. This continued repurchase program announced late last year underscores the optimism around their commitment to also return money there to their shareholders. Let's talk about all of that. And joining us exclusively is the chairman and CEO of the NASDAQ-listed company, of course, Ziyu Shen. Well, thank you for, again, taking the time. It's nice to speak with you. I think last time we spoke was, I think, back in August. So it's been a while. Before we look forward, what this year is likely going to look like for you guys, I want to just take a step back and look at what happened with the earnings that's come through. What, in your view, was the main highlight from the past year, and what didn't go according to plan?
I think the past year, I think the most important for us that we got the break even in Q4 2024, and we starting the very good health, financial status for the company. And also, I think in this year, also we have strong confidence for break even, and we to make the health financing status and to achieve more and more global opportunity with global OEM. That's our very important strategy.
Okay, and so thinking about looking forward, are you looking to increase your output? And if you need to do that in 2025 or perhaps it's 2026, how quickly do you have the capabilities to do that?
We have the quick capability to do that because we still invest huge on the R&D side. Also, we are forwarding, the global business expansion as well. Also, last year, also we win the global deal with the global OEM, Volkswagen. So that's why we quite confident that our revenue growth every year to year, and also our the profitability capability in 2025 as well and the future. So that's we're quite confident.
Yeah, I remember one of the things you mentioned when we spoke to you last in August was, for a company like yourself, the path to become a global player is to really strike deals with global OEMs. There's no other way around that. And you mentioned VW. Congratulations on that, by the way. Can you give us an idea of potentially the other car makers OEMs that you might be speaking with? How do you intend to grow your business from the top line?
Yeah, actually, we already had a very significant and robust technology and product. So we start up from China, and China is the most important and critical market right now. So right now we have confidence to starting service to global OEM. That's our advantage. Because in the past 5 years, we spent a huge R&D investment in this area. Our product, including Antora platform and our software Cloud Peak, is very robust software, robotic products. So that's very useful and helpful for global OEM product strengths, So that's why after Volkswagen, of course, we will going forward to other European and the US and Japanese OEMs to make their product to be upgraded, more intelligent. That's our very important mission and vision on that.
Just thinking about the Chinese market here, I know you spoke with a colleague of mine, Lyndon Liu, not that long ago about some of the sort of fierce pricing competition that we see in the Chinese market and the pressure that some of your customers were putting on you to cut prices. I wonder if you can give us your perspective on how you expect those pricing trends to change through 2025. Do you still expect that to be a challenging area for you? And what can you do? What ability do you have to respond?
Okay, you are talking about very tough question here. Yes, that's very strong competition in China. And the pricing challenge and pressure is huge. But we still got very significant achievements last year. Our gross margin in 2024, still 20% gross margin. That's very important because we spent R&D and innovation on our product to support this kind of competition in China. So that's why in 2025, I believe this trend still will keep working, even in 2026, but no problem for our side because we still innovation and technology on our product can support this kind of competition. We like that. And then we can leverage these for our global OEM and global market competition.
Okay, understood. So give me a sense of how much you plan to spend on R&D, say this year, for example, and whether or not you think spending on R&D will get in the way of your other goal of breaking even.
Okay, so that's also a good question. So our company already keeping like 14%, 15% R&D investment. I mean, 14%, 15% of revenue whole year for investment for R&D already for 3 years already. So this year we still will keeping like 12% of revenue on that. But actually, our revenue year to year grows 30% already 3 years. So that means we still continue invest R&D year and year. So that's why we confidence our competition of our product in the innovation and technology, and strengthens our vertical integration capability from hardware and software system, including semiconductor as well.
Okay, can I ask you then about that? That's an interesting statistic you bring up, 30% revenue growth. I just had to look at some of the estimates that analysts have for your revenues this year, 7.5 billion renminbi, and then 9.6 billion renminbi the year after that. So that actually works out to 30% growth this year and next year. Do you think you'll be able to continue that pace of growth, 30%, 30%?
Okay, this year maybe not keep 30%, like that's very high growth, because I made a decision let break even in this year as the top priority, and the revenue growth as to be the second priority. So because break even is most important for the company to go forward the global supply chain and the global OEM partnership, because you have to get very healthy financial status, including cash flow, to secure future supply chain with global OEMs. So that's why this year break even is the top priority, and still huge investment on R&D is priority, but the growth of revenue is the second priority for me.
Yeah, I mean, digging a little bit deeper into some of those global ambitions that you have, autos have obviously found themselves, one of the key sectors when it comes to tariffs. I'm not just thinking about the US, but really Europe, Canada, and so on. And semiconductors, of course, have also found themselves as being really caught in the crosshairs when it comes to US-China tensions. So I want to ask, what is the biggest challenge or the biggest pain point for you and for ECARX when you think about that global expansion, and how do you respond?
Yeah, so because ECARX already being international company, we already set up the global R&D network. So in China, for China, we're strong here because we start from here. Also, we invest like European R&D 5 years ago. We made like smart car and the Volvo car and the Lotus operating. Also, we got a Volkswagen deal last year. So our global R&D is stronger and stronger every year right now. So that's why global R&D, global supply chain, we are investing now can support future US and the Euro and the Western market. That's my very part of my team. We already built up international coverage, including supply chain and R&D on that.
Okay, excellent to have you. Thank you so much for joining us, Ziyu. That's Ziyu Shen, Chairman and CEO of ECARX. And if you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. You can also join the conversation by sending instant messages to our team and our guests during the live show. Go check it out at TV Go. There's plenty more ahead. Stay with us. You're watching The China Show. Good morning. Welcome back. Here are some of the top political stories that we are watching. House Republicans have passed a legislation to keep the US government open past a Saturday shutdown deadline. The bill will likely need the support of at least 8 Democrats in the Senate to become law. If it fails, a shorter-term stopgap may be tried later in the week. If a shutdown does occur on Saturday, the White House Budget Office would decide which federal workers are furloughed and which essential staff must continue without pay. The world's biggest climate alliance for banks is said to be considering changing a revised strategy for members. A source says the Net Zero Banking Alliance will be handed a proposal that would remove the requirement for members to align their portfolios with a 1.5 degrees Celsius global warming limit. Members would be given the flexibility to adapt their targets to their local markets.
Okay, as we go into the Japanese lunch break, there's some movers to tell you about here. Japanese banks, we'll start with that, but there's some big news on Toyota, and that's your tease of the day. So we're looking at the banking system here on the up, as you can see. So number one, yields are up. There's a BOJ next week. That perhaps goes into this bullish call from Morgan Stanley as pertains to this specific group, right? So that's point number one. And don't worry, we'll talk more about this as we go into the BOJ next week. Right, on Toyota, ask it, and sometimes they'll give it, right? So it looks like Toyota will now grant the full amount of demands coming out of the labor union spring wage negotiations. And is it playing out across the stock? No, it's not. But it's good news as well, of course, if you ask for that pay rise. Plenty more ahead. This is Bloomberg. Right, welcome back. Going into the Japanese lunch break, and is the weather all the same just about across the Pacific? Well, it's a small sample size because I've only had a look at Hong Kong. Tokyo, though, does look like Hong Kong today. Bit on the misty side. No rain, though, I believe, here in Hong Kong, although it looks like it outside. In Japan, it looks like it's a bit wet there and humid. Going into the Japanese lunch break, we're up on the markets themselves. We talked about Toyota, and they are ready to grant, of course, the full ask out of the spring wage conversations. Dollar yen, and the story there, of course, is this melt up in yields we're seeing on the 30-year highest level there in 20 years over in Japan. Asia, outside of Japan, across sector groups, most are higher. Thank you so much for that zoom in. The dollar is coming back on a stronger footing, though. And again, we've been, after flirting with entering a technical correction on the S&P, we're now back to the 5,600 level, which, if I could just borrow the phrase that our colleague Mark Cranfield used to describe this bounce today, looks like a dead cat bounce going, just given the dynamics so far. This interplay between the White House, the tough rhetoric there, and of course what the markets want to hear, which is eventually for maybe that conversation to go away and not have an impact on the economy.
Yeah, that's right. All right. Well,
earnings.
Thinking about geopolitics, but also about earnings.
Yeah.
A company in focus today for us, ASUS. We're looking at the shares of this company after it reported a profit that missed analyst estimates. Revenue for the year beat expectations, though. Joining us exclusively now is S.Y. Hsu, co-CEO of ASUS. S.Y., thank you so much for joining us this morning. Maybe first to begin, just lay out what were some of the highlights from earnings and also some of the places where you didn't meet expectations or things went slightly amiss.
Okay, no problem. I just finished the investors conference yesterday, so I can provide you more detailed information. I think this year Q4, actually we deliver relatively good performance, but with some accident. The small accident, but big in the number. Actually, we have the outstanding receivable. The number is 5-point-something billion NT dollar. But besides this, actually, we have our business operation still quite good. In our system business unit, actually, our PC business growth in this year Q4, the YOY is 20 to 25%. The major contribution is from our AI PC and our gaming PC. For AI PC, the year 24 is the first year of the Copilot Plus PC because we are the first mover and we provide most complete product line. So we achieve over 25% of the Copilot Plus PC market share. And for the gaming PC, actually, in the last year, second half, we achieved over 30% of the market share. I think this is a very good performance. And about our open platform business, our motherboard also have the 20 to 25% year-to-year growth in the revenue in the last year, Q4. And also our motherboard product and our graphic product still maintain the #1 position in the market. And the most important is our AI server business. Actually, last year, Q4, we achieved over 100% growth in the year-to-year. So this is a very good performance in the new AI server business. And last one is our AIoT BG. Actually, in this year, Q4, achieved over 50% of the YY growth. The major contribution is from our NUC product line, because in the last year, we successfully integrated original Intel NUC business into ASUS operation. We also expand our business into some vertical market. So we have very good performance in the last year, Q4. So about the outstanding receivables, actually, this is because in that year, we sell our AI server to the customer in India. This is the very big group, the Yotta Group, their subsidiary company, so-called the NMDC. This company is the major player in India for their government to enable the AI-related business. So I think this kind of things happen in the normal business operation. And even consider this big write-off in the last year Q4. Actually, I think ASUS financial status is still quite strong and healthy. In the year 24, we even delivered the second highest profit number in ASUS history. And also our sales and our legal department already take some action. We have high confidence we can have good news very soon. Yes.
Yeah, S.Y, the fact that you're talking and you're emphasizing the accounts receivable, to me, it's almost like I feel like I'm back in accounting class, and my professor keeps saying accounts receivable going up, that's a good thing, but if it remains at a high level, that's a red flag. So can I press you a little bit more on that? So do you expect the customer, to your point, your big customer in India, do you expect them to pay? When do you expect them to pay? And if you could just highlight the last point you just made there, what is the worst case scenario in case you're not able to collect?
Actually, we have a lot of discussion with the Yotta Group. Actually, Yotta Group in India is a very big group and have very strong financial. So I think this time is only some kind of misoperation or misprediction in their business. So we foresee we can receive those outstanding receivable in this year Q1. Yes.
Okay, thank you for clarifying. I think Rebecca has the next question.
Yeah, I mean, so you've previously talked about demand for AI PCs, and in fact, you sort of touched upon that in your first answer there. I think you cited last year sort of single high-digit figures, but I wanted to ask to what extent that you think this DeepSeek moment and the momentum that's coming through now, not just DeepSeek, but also, of course, Manus and so on, does that change your outlook for demand for AI PCs, and what kind of demand are you projecting?
Okay, I think DeepSeek recently is a very hot topic. I think in the past, the demand for the AI server is most from some big giant because they have a very deep pocket, so they can continue to invest in the computing power. But I think of course, they want to train more powerful large language model. And I think their final target is to achieve the artificial general intelligence, like that kind of capability. So if they want to achieve the AGI, this kind of capability, I think they will keep investing because according to the scaling law, more computing power, more data have higher possibility to achieve that kind of capability. But I think the DeepSeek release is also very good news because if any new technology you want to get into the mainstream, the cost is very important. In the past, the cost is too high for the third party to enable the mainstream application to use the generative AI technology. But after the DeepSeek, because they reduce the cost to even 1/10 or lower, so I think this is very good to help customers to enable those kind of applications because the higher cost not only impact the customer's desirability, but also impact the business viability. So to have the mainstream application enable, I think the low cost is very important. So I think the DeepSeek bring this kind of possibility to whole industry. And of course, for talking about the AI PC, in the year 24, the AI PC is just starting. So only the hardware is ready, but all the software and the application is not so mature. So I think this may take another 2-3 years to get the whole application and environmental more mature to use the AI PC. So for C, in this year, I think the AI PC will occupy about 25 to 30% of the total PC shipment. And even in the next year, we foresee the AI PC will occupy around 60% of the total PC shipment. So I'm very happy, and we would like to take lead in this AI PC transformation.
Can I ask you? You mentioned shipments, S.Y, and one of the main points that I believe you touched on in your earnings call just now is how tariffs will affect the business. So instead of asking a specific question, why don't you tell us how are tariffs going to be a big challenge for you guys, if at all?
Of course, tariff is another very hot topic also. Actually, I think in last year, Q4, everybody knows in this year we need to facing this kind of issue. So actually, we already prepare in advance. I think a lot of companies also doing the same thing. Actually, we ship more goods to our hub in the USA, so we can have more time to respond and do the preparation. Because ASUS is a branding company, so all the manufacturers, we co-work with our EMS, and currently our EMS, they have the different manufacturer site across different countries, including China, Vietnam, Ireland, Indonesia, and India. So we can dynamic allocate our product to do the production in different sites. So I think currently only the U.S. government, they have the extra tax when you manufacture your product in China. So of course, we will move some of our production, especially the goods need to ship to the U.S. to outside of China. We have a lot of choice. And actually, because the regulation will change dynamically, so I think we will do our best to keep our supply chain, have the flexibility and the resilience.
Thanks, S.Y. That's really interesting. I mean, just to your point there about how you're shifting your supply chains to meet some of those challenges around tariffs, can you outline what your plans are for U.S. expansion? I see from your earnings that about 25% of your revenue so far comes from the U.S. Are you planning more when it comes to U.S. expansion? And what are some of those challenges?
Actually, we will adjust dynamically. Actually, the 20% number is not 100% correct because the 25% is include the Canada and the Mexico. So if we only count the U.S., may only occupy around 10%. So this is the real number. And of course, Depending on the customer requirement, we will move our production line outside China. But some customers, they request to have the production line inside the U.S. For example, our AI server. Recently, we like to expand our customer base inside the U.S. and provide better service. So in the year 24, we set up the server production line inside the U.S. and right now already in the operation. So with this production line in the U.S., we can provide better service and efficient service to our customer in the U.S.
Understood. And as a final question there, so thank you for the clarification, by the way. So 10% of overall revenue is U.S. market specifically. Do you have a longer-term target for that percentage of your revenue that comes from specifically the U.S. market? And also connected to that, since you mentioned production lines and you've put up capacity in the U.S., do you have any plans to expand production capacity onshore in the U.S.?
Actually, of course, we have our internal target because we are strong in the U.S. market, especially for our gaming PC. So we are a leader in this segment. But we still need to consider the cost issue. Of course, if we set up the production line in the U.S., I think the cost compared to outside the U.S. Will be higher. So depend on the customer what kind of cost and pricing they can accept. Of course, ASUS will select the most efficient way to provide our device to our customer. Actually, ASUS will do everything we can do to control the cost, and we would like to deliver the best service and the best customer value to the U.S. market with the competitive pricing.
S.Y. Hsu, thank you so much for the time. We'd love to speak to you again and get an update really of some of the plans you just outlined there. Thanks for the insights as well there. Co-CEO at ASUS joining us there out of their office. Okay, plenty more ahead. This is The China Show.
Good morning. You are watching The China Show. Now, Indian Prime Minister Narendra Modi is in Mauritius for a 2-day visit. He's expected to attend the country's National Day celebrations as a chief guest on Wednesday, as New Delhi looks to reinforce the region's importance to India. New Delhi is among the largest trading partners of Mauritius, and the visit comes as China looks to increase its presence in the region, and Beijing's power play in the Indian Ocean is alarming New Delhi. It's also the topic of our big take today, and Bloomberg Global Business senior reporter Kay Wan-ha is with us. So tell us first of all, why is the Indian Ocean becoming such an important focal point for these geopolitical tensions, these power plays, and how are we seeing that play out?
Well, the Indian Ocean is so vast. I mean, you've got an area that stretches all the way from the Horn of Africa to Southeast Asia, closer to where we are. And, these are places, of course, that are, people might know them as tropical paradises, Mauritius, the Maldives and Seychelles, but they've also become places that are very important geopolitically because you see both China and India, as you mentioned, jockeying for power and influence in these very important waters. And we know, it's so important for trade. Both China and India, they get half of their oil supply through these waters. The U.S. also has a vested interest as well. India traditionally has seen this as their backyard, the big brother in the region, but they're very alarmed by what China is doing in the region, flexing its military muscle. It's now got, bases from Djibouti in East Africa clear to Cambodia on the other side of the ocean. And India really wants to make sure that these waters are secure for its own trade. And so you see a lot of jockeying for power and influence in these places that, before were just nice tropical paradises.
Yeah, well, to your point, right? So that's the hard power part of the conversation. China's been also using soft power. There's the Belt and Road, of course, that we know. How is that playing out as far as infrastructure projects is concerned?
You're seeing so much of it. I mean, you're right. The Belt and Road Initiative does involve a lot of these Indian Ocean countries. Mauritius isn't one of them, but Seychelles and Maldives, Bangladesh and Sri Lanka, they've all benefited from Belt and Road. And even Mauritius, which isn't a Belt and Road Initiative country, they've also seen a lot of this infrastructure sugar, so to speak, right? China has spent money in the last few years to help build or finance an airport, a cruise port, a sports complex as well as a dam. And India feels like now it has to also counter with infrastructure spending as well. It signed a $353 million project to help finance, for example, a new Supreme Court building, and it's built a subway line. So a lot of attention and money is going to this region. These countries, of course, feel like they're getting a lot of infrastructure help and development, but at the same time, they know they're walking such a tightrope politically because it comes with a cost, of course.
Yeah, and I suppose sort of thinking about that political tightrope, there's another big power that we haven't mentioned, which is sort of the obvious other power in the room, which is the US. So what are the US interests in all of this? I mean, historically, the US has been very concerned whenever it sees China looking to expand its political power, even sort of soft diplomacy overseas.
You're so right. I mean, the US obviously as a geopolitical power wants to make sure that these waters are free for trade to flow, through it. But there's also a very strategic reason why the U.S. is interested. It right now operates a military base jointly with the UK on a very remote island called Diego Garcia in the middle of the Indian Ocean. And, from that base, it actually monitors submarine activity. It used it previously to launch bombing raids in Afghanistan and Iraq. And that island is slated to return back to Mauritius under a deal that the UK has crafted as part of a United Nations court ruling. But sources are telling us that it's unclear at this point whether U.S. President Donald Trump is going to sign off on the deal. I mean, folks in Washington really clearly recognize that it's so important for the U.S. to have a presence in the Indian Ocean. But it's very unclear at the moment, with U.S., with Donald Trump, his attention is diverted elsewhere at the moment, what he sees the U.S. role in the region and how that's going to play out at a very crucial time where India and China are obviously in the mix.
And it's a critical moment, I suppose, too, of where the US is sort of reevaluating its role, or Donald Trump particularly is reevaluating its role when it comes to global politics. Thank you so much for joining us. That was Bloomberg's global business senior reporter and Big Take Asia podcast host, Kate Wan-ha. And you can read the piece on the terminal now. The function for subscribers is NI Big Take. It's also out on Bloomberg.com. There's some really fantastic on-the-ground reporting. And you can also listen to Wan-ha discuss the story in detail with Bloomberg's very own Peter Martin in this week's Big Take Asia podcast. That's available wherever you get your podcasts. Stay with us. There's plenty more ahead. You're watching Bloomberg.
Right, welcome back. So there are a couple of markets that are standing out today across the region. So one is Australia, we're down 1.4, as you can see. There's the tariff story and the exemption that President Trump says they're not going to get. And the market is effectively now down about just over 9% now. So we are very close to entering a technical correction if this continues. That's a big if, right? One that is looking like it has entered a correction if things end this way is Malaysia. Biggest decliner in the region as a market. We're now down 11% from the peak, which effectively now puts us into a technical correction territory, if you measure that, of course, at about the 10% level. Just to tell you about those two markets. But, of course, the other focus has been really here on Hong Kong and the tech stocks and the Hang Seng Index, too.
Yeah, exactly. I mean, we had 3 days of losses, and we've had southbound flows actually retreating a little bit. This looks not that dissimilar from actually what we were seeing yesterday morning, when we were
your hopes up, then.
Optimistic that momentum might be sustained, and I might see some of those investors trying to buy the dip here. But yeah, it does feel like a little bit of a tentative positivity coming back.
Yeah, because it has almost been near unbridled optimism really going into this week, where I think if you look at some of the daily charts, there has been You could make the argument that recently has been a period of consolidation of this, but as Mark Cranston points out, there is a long runway likely ahead here for Chinese equities. Anyway, that's it from us here on the China Show. We'll see you all tomorrow.